Okay, so my dear friends, this video is for educational and informational purposes only. Please do your own research or consult a professional financial advisor before investing your money. Thank you. Look at these numbers on my screen right now. The US stock market just wrapped up a brutal week. Tech stocks are bleeding. Nvidia alone wiped out over $400 billion in market cap. And the S&P 500 just hit its longest daily losing streak since last August. A lot of people on social media are panicking, thinking the entire market is crashing. But as logical investors, we know that when prices drop, great businesses potentially go on sale. Today we are going to look past the hype, break down the actual live data and see if this pullback is a trap or a massive buying opportunity. Let's look at the facts. Did you think why is this happening? I am telling you the reason why is this happening. Two major catalysts drove the market down this week. Number 1. Reports came out that OpenAI might delay its massive public listing until 2027. This gave Wall Street a reality check. Investors are starting to ask, big companies are spending billions on AI chips, but when will we see the actual profits? This doubt dragged down the whole sector. Micron dropped 7% and Western Digital fell 13%. Number 2. Geopolitical tension. Recent drone attacks on a cargo ship and retaliatory airstrikes pushed oil prices right back over $70. This creates fear. But remember, headlines create short-term noise, but we care about long-term business fundamentals. Let's check the underlying numbers. Even after an 1% drop, look at this price to earnings ratio. It's still incredibly high compared to historical average. Ask yourself, can this company realistically grow its revenue fast enough over the next 10 years to justify this price? Now look at their free cash flow. It's highly impressive and they have plenty of cash with a very little net debt. That's a great sign. But look at SpaceX. It had a massive public listing, but it plunged 17% this week to around $153 because the initial price was driven by pure hype. This is exactly why we always calculate a margin of safety. If you buy a stock when it's overvalued, even an amazing company can give you terrible financial returns. So what's the game plan? This market pullback is actually healthy. If you look at small cap stocks, they actually went up slightly this week, meaning money is not just rotating out of expensive tech into cheaper areas. For me, these major tech names still don't offer a comfortable margin of safety at today's price. I am keeping my cash ready and waiting for another 15 to 20% drop before I start buying. But I want to know your strategy. Are you buying this dip or are you waiting on the sidelines? Let me know in the comments below.